Alright everyone, so welcome to another video, and in this video I am going to talk about, in a sense, my theory, and it's called Advanced Candlestick Theory, ACT for short. Now yes, I will be combining ICT concepts and SMC together to show you the power of this theory. Now obviously I want to shout out to ICT because a lot of this comes from him. Things like the power of three, open, high, low, close, etc, etc. So if you haven't seen anything related to the power of three or even market maker videos, look at my market maker video first and look at my supply and demand series, SMC Explained. But essentially it's a theory that I sort of put together from other stuff that I've already seen before studying ICT, but I never actually found a way to put it together, and I wasn't really sure of what I was doing. And so I also did a little bit of YouTube searching after I had already learned everything I know, and I just wanted to make sure that I wasn't stealing anyone's concept and just making it seem like I was rebranding it or something like that. Now, funny enough, I found someone, I forgot what his freaking YouTube channel, if I remember it, I'll post it in the link down below, the description down below. But he essentially trades this way, but he only uses it on the daily time frame. But what I'm going to teach you is how to use it on all time frames. So this theory can be useful for any concept or any trading strategy that you're currently trading with, and it works on any asset, any pair, any strategy, any time frame. And you'll see what I mean in just a second, but I wanted to just briefly explain and give out those shout outs to the respective people that deserve it, especially ICT. So without wasting more time, ladies and gents, let's begin. All right, ladies and gents, so if you don't know the basic anatomy of a candlestick for a bullish and bearish candlestick, you need to go back to the basics. Please don't watch this video. Go back to the basics. Watch all my other stuff, especially the candlesticks video, okay? So we all know from ICT that the wick of a candle can symbolize the manipulation or sometimes even the accumulation. Now we also know that the body is seen as the distribution, right? And my theory is, if we combine ICT's concepts of manipulation, accumulation, and distribution, we can apply it essentially on basically any candle on any time frame, if you really think about it. So all I'm saying is, if you find a area on any time frame, right, you just mark up any area or just mark up any candlestick, right? So I'm going to give you an example, but mark up the candlestick. Let's pretend this is just like a 15-minute candlestick, right? You mark up the candlestick, you mark up the open, and then you mark up the close, and then you go down to the next time frame, or you go down to like a 1 minute. And then on the 1 minute, you would essentially wait for price to sort of manipulate or accumulate, and then you would find the area where you think price is going to begin to distribute. Now you could either enter on the area where you think the manipulation has ended, so that way you can write down the distribution. You see where I'm getting at? So same thing for like a bullish candlestick, right? During the open, price will usually come down, right, manipulate, and then after it's done manipulating, then it'll distribute. Now obviously not all candlesticks are going to look like this, right, with short wicks. Some wicks might be fairly long, and sometimes they might not even have a wick, but that's okay. You can still trade using this method, but the point is it can be applied on any time frame. So you can essentially use like a 3-day candlestick, which is an example that I'm about to show you, and you can even use it as a daily bias. And this method, you can apply it on any strategy, guys, any strategy. So if you're trading a specific ICT strategy, you can apply it on that. If you're trading supply and demand, you can also apply it on there. If you have your own strategy, same thing, you can apply it on there. So I'm going to jump on maybe 2 or 3 examples, and I'm going to show you guys exactly how you can use this theory. Okay, let's begin. Alright, so before I begin, I would recommend you watch both of my daily bias videos, the simple version of the simple way that ICT has taught it, and then the more advanced version that he has taught, but that one I think is like an hour long. But you have to watch it, guys. You have to watch it. It's very important because you can actually apply daily bias and even draw on liquidity or IRL to ERL to this method. I'm only going to give you a very simple way that you can apply this, But if you were to add daily bias to it, or IRL to ERL, you can make this so much more powerful, guys. So I just thought I should preface it with that. Now, for AUD USD, as you can see, price has been somewhat bearish, but it's mainly been accumulating. If you think about it, it doesn't really have much direction. But if we were to use the same concepts that ICT has taught with daily bias, we could simply trade the continuation of the candles. So, as you can see here, we have this continuation of that candle there, right? That one right there, that one right here, pretty bullish. Okay, and I'm disregarding any fair value gaps or external range liquidity. I'm just doing it as simple as possible. And this is the 3-day time frame, okay? So we have that marked up. Now, what I'm going to do is I'm going to drop down to the 15-minute. But now that we know that we have these candles marked up, all we're going to do is simply wait for some manipulation to occur so that way we can enter during the time period that it seems like it's about to end. Okay, so let's let price play out. Okay, right off the bat, I can already tell you this already looks like some kind of manipulation. Why? That huge dip in price, which by the way, I'm making an Asian session strategy real soon with this concept, so stay tuned, guys. Stay very tuned. I will be live streaming it at some point. So tapped into this fair value gap, some bullish candles here, and I'm gonna wait a little bit more. So we got some more gaps, some candlestick here, some candlestick action here. You know what? I'm gonna enter, and then I'm gonna put my stop loss right here. And you know what? I'm just gonna go for like a fixed 2R, just a quick flex. All right, fixed 2R. Bam! You saw that? I know y'all saw that. Oh man, obviously I cherry picked the example. But real quick, what did you guys see? Manipulation. Tapped into this fair value gap. Right off the bat started distributing. Now since this is 3 days worth of data, right? Since we're marking up 3 days, you can also hold the trade for 3 days. So let's see how far we can get with just 3 days worth of data. Let's play it out a little lot faster. That's not even the 3rd day yet. Not even the 3rd day yet, guys. And all I did, guys, to cherry pick this example was I just made sure that the candlesticks were continuing. Were continuation candle. That's all I did. I didn't even bother looking into this part, like the lower time frame part. Okay, so we got 1, 2, 3. 3 days worth of data. Look at that. Sniper entry, man. Sniper. You could have trailed it. If you've seen my actively trailing your stop loss video, you could have caught some mad money with this. I'm telling you. I want to show you guys another example, okay? I'm going to show you guys another example. All right, so for this example, I'm going to be using S&P 500. So my main candle will be on the 15-minute. Now overall, we're pretty bullish, I think. Yeah, we're pretty bullish. So I'm just going to use this simple continuation method. Now, full disclosure, guys, don't just go trading exactly like this or scalping like this. I'm just showing you this as an example, right? To, you know, showcase this theory. So I'm going to actually mark it up this way. I'm going to mark up the, well, you know what? I'll mark it up first like this. Mark it up first like that. And then I'll mark it up like I usually do. So this is just to remind me of what I am doing here. And I'm going to use this as a possible target for liquidity. Okay, so I'm expecting next candle to be bullish. All right, let's go to the 5-minute. You know what? Let's go to the 1 minute. Yeah. All right. So I'm expecting for the next candle to have some kind of manipulation, and then we'll enter for the distribution. Okay, so we have the opening here, right? The opening comes after or right next to the bullish close. So it would be like here, I guess. What do we have? Some manipulation. I can't really tell which one's a fair value gap in this one. I guess this would be the fair value gap. Point is, I think that's a fair value gap, and I'm going to get in pretty aggressive. I'm going to put it at 50% of this wick. Let's see what happens. I'm gonna go real slow, guys, so that way my stop loss doesn't get hit. I know y'all go slow when y'all back testing, man. Y'all get nervous. Bam. TP hit, man. So essentially what we did was we waited for that manipulation to occur on the smaller time frame, and we had it, but it looks like I should have marked my open down here. Dummy. Open was right here. My bad, y'all. So anyways, that was my open, but the point is I got it right. The entry right. So the open was right there, came down below the open, tapped into this fair value gap. When I saw price rejecting off the fair value gap with this bullish engulfing candle, I said, okay, we're probably done with the manipulation. Time to ride the distribution. Now I've got one more example for you guys. This is actually a really interesting one, so pay very close attention to it. Okay, let's move on. All right, so for this one, I'm using gold. Now, as you can see, gold is being fairly bullish. So again, simple daily bias analysis here. Obviously, we can go more advanced if we wanted to. So here, I'm going to use this again. This obviously broke above this bearish candle, so we're good. Here as well. Okay, so obviously I'm still waiting for price to target this high. Hopefully we can either target that high, or you know what, I'll just target this high right here. Not too greedy. And that's a big if. All right, and then you know what, I'm going to drop down to the 5-minute. I'm going to drop down to the 5-minute for you. And for this example, I'm going to be using an indicator called the open daily line. This gives you the actual open for the daily candle. So it's not going to be an ICT open. It's going to be the actual open for the daily candle, or the next session. So we're just going to use this as reference. And if you look at that, if you take a look at this, actually, if we're using the open of the daily candle, right? If we're using the actual open, what does this tell you? Big wick. You go down to the 5-minute, big price action, big manipulation. Look at that, big manipulation, and then finally the distribution, right? Because you're now actually using the actual open here for the daily candle. That's how you guys should be reading it, or at least I don't know why ICT never taught it like that, or maybe he did. Maybe I just didn't pay close enough attention. I don't wanna crap on him. All right, so. Let's let it play. Okay, so we got an open, small wick down, possible reaction. I mean, looks like it just swept some liquidity, but I'm not seeing anything too promising just yet. We're still going down, unless it's targeting this right here. If not, well, you know what? Hold on. I'm thinking it's reacting to this candle on a higher time frame. Let's see here. Yeah, well, let's just stick on the 5-minute. I'm just trying to see what price tells me or gives me. Price says, "Hey man, I'm done being bearish. I'm trying to go up." Oh, some sweep of liquidity here. Some strong bullish movement. Let's see if I get something. Okay, so it looks like we're starting to break structure towards the upside. Nope, not yet. Okay, so we're starting to create some kind of low here that's trying to be protected. Okay, nice. Okay, that's no, not yet. Now, okay, so reason why I'm entering here, there's some manipulation, some accumulation, and I'm thinking we're about to start distributing towards the upside. So as a matter of fact, I think I'm just going to target this high, because I'm assuming that if this is going to be a bullish candle, bullish daily candle, I'm assuming that the continuation is going to break above it. So let's see what happens. Oh, okay, so I was wrong. We're targeting the fair value gap, and I could just erase this part of the video, but I'm not going to do that. And actually, it looks like we tapped into this order block. All right, if I don't get this one, then we're all cooked, guys. We're all cooked. All right, losses are part of the game, guys. Losses is part of the game. If you can't take a loss, don't trade. This is why I hate the 5-minute. I just hate it. All right, cool. So one small L and one W. Now, yeah, you could just make this as your own strategy if you want. Let me know how that goes, actually, if you guys do plan on using it as your own strategy. But yeah, guys, if you're trying to catch some continuations, or if you want to add this into your own current strategy, or even my own strategies, like my supply and demand strategies, you can very much add it. Use the daily as your bias, use the open, use this opening line as your bias, or part of your manipulation detection tool or whatever, and see if you can catch some pips. This is actually something that I've been testing, demoing, or something similar to this, and I believe I showed it on my weekly recaps, on one of my weekly recaps. I think I had 2 W's and 1 L for the week. I could have caught more, but I've been so entrenched in trying to make stuff like this for you guys that I don't really trade anymore. Every now and then I do, but I mostly just let my bots now trade. So I will be making a video on the types of bots that I'm using to manage my trading account. They're not mine. Those bots I actually bought from the MetaTrader platform, but they're such good bots, man. Honestly, they're so good. I'm surprised you guys haven't tried them yet. But anyways, guys, that's all I have for you. Like and subscribe. Obviously, join the Discord. It's free. I'm not charging you for anything. Free signals in the Discord as well from another bot that I have that I use specifically for signals. And other than that, that's it, guys. That's all I have for you. If you have any questions, comments, concerns, anything, whatever the case may be, let me know in the comments or in the Discord. Alright, guys, I'll talk to you guys soon. Take it easy. Let's make some money. And I'll see you in the next one. Peace.